Joining us now is former Wells Fargo CEO Dick Kovacevich. Dick, this is something where it's perfect having you on here to talk about this because you used to run one of America's biggest banks. That bank, as its legacy problems have had kind of bubbling up over the course of the last couple of years, have shown that perhaps the U.S. banks are in a stronger position. Is Wells in a position, J.P. Morgan, Citi, Bank of America, to weather this banking crisis storm?
No question. As you mentioned, the industry and especially the larger banks are strong, they're well capitalized, they're profitable, and they have all the capacity to support creditworthy customers and continue to have the economy grow.
Now, the issue right now is about whether or not we feel as there's a contagion effect happening. We remember people harken back to the Resolution Trust Corporation days, savings and loans back in the 90s, early 90s. They go back to the great financial crisis back in 2008, 2009. There's been an evolution. So what does it look like now? Can we expect the same kind of crisis as we saw then today?
Absolutely not. This is nothing like 2008. I lived through 2008, and I can assure you that this is not a systemic risk of the industry. There are some issues, particularly, as you mentioned, some of the regional banks who have a liquidity issue, not a solvency issue, but a liquidity issue. In fact, most bank failures are due to liquidity. And it's because they were shocked, the rapid and unexpected demise of SVB, and they say, can that happen to my bank? And they're not waiting to find that out, especially if uninsured depositors. They're making sure that they diversify their deposits through other financial institutions, and that's understandable. But this is a panic of fear, not facts. And it's a typical run. When it happens, people just, and you can understand why, they are cautious and they want to diversify their deposits, but the deposits stay within the system. And that's why the banks are able to continue to loan money and support economic growth.
Dick Kovacevich still with us. You think that the Fed is ultimately going to be cutting rates this year, Dick, because of all this?
I doubt it. It depends upon how bad the recession is. It's going to happen. But I just like to comment. Bullard he's exactly right. I couldn't agree with him more. And he's actually been right for a year or so in terms of his policies. What's important to, again, I think to understand is what an outlier SVB was. I don't know of any other financial institution was like SVB, but depositors don't understand that. They think that if it was so rapid and unexpected with SVB, it could happen to their bank, and I believe this is going to settle down. It may take a week, it may take a couple of weeks, but there's nothing fundamentally wrong with the banking industry. This is a fear, not about facts.
It's really good perspective, Dick. The problem is that once you get this confidence problem, then the market starts looking for weak spots because it wasn't just SVB, Signature Bank, also the crypto bank. We also had Credit Suisse and an emergency shotgun wedding to UBS over last weekend, and now there are worries about Deutsche Bank. So there is a sort of domino effect that is leading us to wonder: will governments and central banks have to do more, and will there be a bigger risk here systemically?
Well, that's what panics do. That's what runs are. Now, again, I think when you talk about Switzerland and so on, there were problems there. There's problems with SVB. There can be problems with other regional banks, but it's not systemic. And that's the important part. There is not going to be contagion other than institutions that have liquidity issues, and you can handle those individually. Some of them, the issues could lead to lower profits, and because they're now having to pay market rates as opposed to lower rates, and this could increase decrease their profitability, and they may have to be acquired or get more capital. But it's a situation that can be handled, and it will not, in my opinion, come anywhere close to previous financial problems that we had, like in 2008 and times before that.